Hello everybody, thank you all for joining. It is Sunday, and that means Q&A day. So the top questions of the week are coming in hot, and there's some very interesting ones this week. So thank you to the mods in the chat, and thank you to everybody for coming. Today we're going to talk about Bitcoin scarcity, and does it have more moon potential than maybe some altcoins? We'll also look at some high-stake cryptos, a lot of questions about my so-called SOLALT portfolio, some analysis of some DEXs, what's going to happen with Jupiter Airdrop, my risk curve, which ties into account a whole bunch of different elements like adoption and technology, etc. Also, a new token, which we uncovered, and a big shout out to the community as well. Also, staking on Coinbase versus Phantom, plus my 3 retirement secrets. So let's jump in. I got my little key. And let's go. And anything I say here is just my opinion. I just edutain on the internet. It is definitely not financial advice. And all the questions come from Patreon. Big shout out to everybody on Patreon there as well. Thank you all for coming. So very first question, as usual, we don't waste time on this channel. Let's jump in to you day. Given how scarce Bitcoin is it possible that as ETF monies come in, it could go through the roof at a significant higher rate than, say, Solana? My bet has always been to be in Solana and other alts, so that I could eventually move it to Bitcoin. Am I missing a beat by having a Solana bag that's 12 times the size of my pure Bitcoin bag? Also, counting my proxies to Bitcoin, miners, MicroStrategy, my total Bitcoin bag is 2x my Solana bag. So this is an interesting question, and I've gone through some of the gyrations you have as well over the past year and a half, determining exactly how to allocate, but then my allocations get completely skewed, literally badly skewed, because certain things move way faster than other things. So let's talk about a quick summary of kind of what you said, make sure I understand. 1, you are 8% Bitcoin in pure form and 92% Solana, which means, yes, you have time for a rebalance. However, you do have proxies like MicroStrategy and Bitcoin miners, and you are 33% in that case Sol, 67% Bitcoin and Bitcoin proxies. So it's not catastrophic. Pure form, yes, you are light. Proxies, no, you're not. And that has been the way to play it actually this whole season, which is the correct way to go. Next, let's look at some targets. Now, there is that potential, and I completely buy into it and believe it, that what has me fascinated with Bitcoin since the beginning of time is its scarcity. Never before have we had an asset that is absolutely finite and scarce. Also, it's very small, and the amount of money coming in real soon is going to blow it through the roof. The question is, how high can it go? So let's look at this little chart here, which is from my 2024 targets. And from all these different targets, we have a low of 60,000 going all the way up to $500,000. The question is, where do you want to play? So I like to take a whole bunch of different targets and create an average, and the average is 151k or 3.44x. I think if Bitcoin went to 150k, we'd all be rejoicing, considering the beautiful bear market we had and what an opportunity it was to buy so cheap. 15,500, 16,000. We were buying at 17.5 and less for a long time. It was magnificent. But imagine going from say 17.5, 15k, or 20k even, all the way up to 150. That's mind-blowing for such a big asset, which is actually a very small asset in the scheme of things. So assuming this, Bitcoin could do a 3.44x. But if all the money comes in, if the bond market and the pension funds start rolling into Bitcoin, we could see a lot more. We've never, ever seen a money flow, a tsunami coming in with such a scarce asset. So it's going to be fascinating to watch. But anyway, I think 3.44 is achievable if the spot ETFs get approved and the money comes in like we expect. Now, the base case for Solana, I believe, is a 3.9x from where we are today, and that assumes it gets 3% of Bitcoin dominance, the total crypto dominance, and the total crypto market cap goes to 5 trillion. That'll give it $150 billion market cap, and that is kind of like 3.9x from where we are today, taking us up to $363. So you get a higher return potentially from Solana, but you have to also remember this is kind of my risk curve, which I've reallocated a few names, a couple of new names here on this risk curve, which I've been using for a long time. And down the left, you can see that Bitcoin is lower risk than Solana. And now, Ethereum is higher risk than Solana in my opinion because of relative market caps and adoption and everything else. Then we have Near Protocol and SUI, etc. Aptos is there too, Tron popping in there too. All based on speed, adoption, breadth of dApps, all that type of stuff goes into account here. And I know people that may have something way out on the risk curve. More risk, but not necessarily more return as well. Sometimes things are high risk and low return, so you got to balance that out too. So back to your question, are you okay? Let's see. Could it moon faster? It's a tough question. We don't know. We don't have a crystal ball. We got models. We don't have a crystal ball. But yes, because of scarcity, it could definitely moon faster. But what's very important is as the crypto market cap does rise, it will float all boats, which means other altcoins, other assets will do well over time as well. In addition, I don't see Bitcoin rising in isolation. It may run a little bit faster sometimes, but the rest will catch up and the rest will be along for the ride. So there you are. It's the base case for Sol is 3.9x from here and Bitcoin is 3.4x. So they're very tight. But again, you have to balance your risk and that's up to you to determine. But I like the way you have some proxies and a heavy load of them as well. And sometimes that's a great on-ramp as well for many people who don't want to self-custody. They use proxies. And that's why proxies are wonderful. Let's go to the next question. This is from 772272. I'm not sure how to read that. But do you think the Jupiter airdrop will benefit Orca again? During Jito's airdrop, Orca went up 3x. Yes, it did. And again, this is kind of what I mentioned earlier. A rising tide literally floats all boats. So let's look at what happened. First of all, it's not just a halo effect for Orca, but also Raydium and another one that popped to my radar is a thing called Lifinity. It's kind of like Infinity, but Lifinity. But these three alone capture 63% of the volume, nearly 2/3 on Jupiter, which is stunning. And I do use Jupiter a lot. This is a visual of that, the Jupiter volume broken out by all the different chains. Again, the winners take most. And why is this actually happening? So let's break that down, this chart, into the three. And here they are. Raydium does 14.1%, Orca 34.8%, and Lifinity 13.4%. So like, I've got this Lifinity thing that is doing a huge amount of volume. So what's going on? So there's actually another question regarding this asset we're going to dig into in a second. But back to your question, will the Jupiter airdrop float all boats? Yes, it will. When is it happening? It's happening in the 4th week of January. So be ready. It's going to be good. They're actually referring to this as Jupuary. It's like all these like Moonvember, etc. But Jupiter and January is Jupuary. Another hard word to say, happening in the 4th week. It will happen before the end of this month, and it will be exciting. Anybody who's used the jupe.ag DEX will get airdrop tokens as long as they did it before a certain cutoff date, which I don't remember what that was, a couple of weeks back. Anyway, so this is tying in now this next question. The community is very eager about these things. So the question is, from Metaverse Explorer, is Lifinity in your SOLALT portfolio? It probably has the best tokenomics on Solana. Crypto Compendium score, question mark. Please refer to its monstrous TVL, e.g. it does more volume than Curve in 24 hours with 4.2 versus 1.6 billion. So this is interesting. And we did some digging. Let's look at some of the data regarding what is this Lifinity thing. Let's look at volume over TVL. You can see here it comes in 9 from all the DEXs on the planet. It's big. What's also interesting to note here, which ties into my black hole sun theory, is 4 of the top 9 DEXs are all Solana chains. And the others are kind of a mixed bag of kind of Ethereum stuff. But these things are growing very fast. Let me show you an illustration of what I mean by growing fast. This is Lifinity Volume. Zooming in, and it is an S-curve, and it's going through the roof. Again, it's a tiny, obscure token that people are using a lot, probably mostly because it works really well, and they have some unique stuff as well in how they work as a DEX, and Jupiter, halo effect. So again, we have the halo effect, first of all, from Solana. Everything is going to the best, cheapest, fastest, most secure platform. Then we have the Solana ecosystem. That's why I built the Solana Alt Portfolio. And now you're seeing this type of adoption happen, which is good. Let's look at the tokenomics real quick. And it's hard to tell, but two things do stand out. One, it is a tiny, tiny, tiny little asset. Yesterday, the market cap of this was $25 million. And you can see here as well, there's no VCs, which is good. The DAO treasury is 59%. The team only get 20%. Flare holders 1%, and the VEIDO, which is the LFINITY, which is the escrow to Lifinity, is 20%. So it is a pretty good, fair-looking tokenomic structure. You're correct there. In addition, what I like to do is always look at relative market caps, relative value, look at the adoption, look at the number of users, look at the DEX volume, look at the DEX volume of TVL, and this is what stood out to me. And here you can see the market cap of the assets, Uniswap, and somehow the formatting got a bit messed up. Apologies for that, but it's $3.715 billion. Next in the box is Raydium, $298 million. Next is Orca, $241 million. So, and then all the way to the right is this little Lifinity thing at $25.78 million. Remember, it does this much volume. Another perspective of the volume, 13.4% of the volume, and it's crazy how it is actually doing that as being such a small company. Now, where I'm lost where my train of thought. So here we are. I think as a result of that, yes, it is an interesting play. You're dead right. Now, there was one other thing as well. Yeah. This next question ties into the previous two questions. Every week it's fascinating to see what the community are thinking and how they are thinking and how all the questions are interrelated. And this is fascinating. So this one, I'm not fully finished answering the previous question, but this one from Comrade asks a question. It's a 3-part question, actually. It's a clever way to load it. Does staking Sol on Phantom Wallet really bring better returns than Coinbase, or are there additional fees and advice involved? Number 2, is it still a good idea to DCA to slowly build up on this, or perhaps build a SOLALT portfolio alongside it to diversify? And 3, perhaps you can update your retire on Solana strategy to include SOLALT Portfolio. All great questions. Let me tackle them one by one as well. First of all, Coinbase versus Phantom. A couple of things. Solana staking on Phantom Wallet does yield better returns compared to Coinbase. Phantom Wallet allows users to choose their own validator for staking, and you can get very low commissions and very high returns. And choosing a validator with the lowest commissions rate with a high return can lead to much higher returns. Now, remember, pick one that has a large amount of staking, so it's safe. The bigger, the safer. That's basically how it works. Also, Coinbase takes a 25% cut of the staking rewards from the Solana network. That's greedy, and that reduces user returns. And both Phantom Wallet and Coinbase have very distinct fee structures. Also, Phantom Wallet charges a tiny, tiny, tiny sliver of a fee for each transaction, and Coinbase fee structure is much more complex, much higher, etc. So again, it's really up to you to decide. Do you want more return and stake directly with Phantom, or do you want to keep your Solana on an exchange and stake with Coinbase? It's up to you, whatever you think is safer. As far as I'm concerned, the second question, is it still a good idea to DCA? Yes, it sure is. I'm doing it every week. In fact, I sold out of a lot of positions at the end of the year, and I blew a lot of cash, and I got into a few positions, which we'll also talk about a little bit later as well. But pretty much most days on dips, I still buy Solana, and I use that to trade into the Solana alt portfolio. I don't buy USDC because I have a bear of a time moving it around for some strange reason, but I have no problem moving Solana around. So this is the Sol alt portfolio, and yes, Lifinity is now a part of it. I forgot the I there, but I only share the actual allocations on Patreon because I don't want to move or jerk markets around. So community first. Hope that answers all your questions. Next is another one related to the previous ones. And again, I am very interested in the dApps that make the most money, have the most adoption, the most users, the most volume. So I tend to be very heavily focused on aggregators and dexes, not so much the NFT stuff or meme coins. I like to really know where things are going. So the question is from Yes, what are your price predictions for Ray and Orca? Those are my sandbag predictions. First of all, for Ray, I do believe, using the ATR model, a $16 price is possible, but given dilution, it's really a $5.33 compared to where it was way back in 2021. So that is a 4.4x. What do I mean by dilution? Well, if you go back to remember, Raydium was very new in 2021, and there was only, let me see how many tokens were out there. Circulating supply, 74 million. Now the circulating supply is 250 million, so it's gone up a lot. That's what I mean by dilution. So you have to bear that in mind. So when you think about things going back to all-time high, when there's a lot more tokens or shares out there, it's harder for it to do. Unless, of course, the business has grown with a lot more adoption, a lot more fees, a lot more revenue, a lot more profit. Same analog is Bitcoin miners. They issue stock to buy rigs, get rid of their old ones, scale up their hash. We'll talk about that in a minute too. Next is Orca. This is Orca actually on the Lilo model, and it would be at least a 3x, getting back to $14.48. I use these different models to get a different feel for where things would go, and they end up being pretty precise. This is the base case. It's probably going to go a lot higher, especially considering what we showed earlier, how much Orca actually does. Where is that little slide? Bear with me, I had to get up. Here, you can see Orca does nearly 35% of all Jupiter volume. Jupiter does a ton of volume as well. So that's kind of where I see these two going as we go forward. So hope that helps. A lot of questions around all these different things. Next question is from More Cowbell. I plan to retire in a year. 65% of my investments are in mutual funds and 35% are in equities and crypto, Tesla, NVDA, Bitcoin, Solana, and Ethereum. I want to go heavier in crypto and equities, but I'm concerned about the risk on assets due to retirement proximity. Thoughts? So this was, again, I'll answer this the way I look at retirement. I was fortunate enough to be able to quit, get out of the rat race a few years ago, and then I got bored and started doing this. But these are the three, what I believe, the most important retirement secrets that nobody will tell you. Nobody will ever tell you. But I think it's how you can actually supplement your income. For example, covered calls. If you have a bag of, say, 100 shares of, MicroStrategy or Tesla, you can sell calls against them. And I sold a covered call on MicroStrategy, and it paid for 3 years of my mortgage in just 4 days. That's how you can make easy, fast money in the market, but you have to have the tools and you have to be able to time things carefully. So covered calls are a great way to supplement your income. Also, rental income is critical. Investing in any type of rental property will give you a steady stream of passive income. But of course, you have to do a little bit of work, be a landlord, etc., and do some maintenance. But it can actually, what I like to do is have enough rental income so you can cover your burn. And then what I call controlling the burn, step 3. One of the most important factors in successful retirement is controlling your expenses. This involves downsizing your home, cutting unnecessary expenses, and finding ways to save on healthcare costs, taxes, all that type of stuff. Stick to a budget. Do not blow. Like the opportunity cost of, say, you want to go with your partner on a $20,000 vacation and build a memory. You should build a memory, but should you blow 20 grand? Because when you turn that 20 grand into something like, say, Tesla shares or Solana tokens or whatever, and how much that can be worth in 2 or 3 years, then it makes that literally that $20,000 vacation becomes a $100,000 plus vacation, and that is expensive. So control the burn. When you get really comfortable, you got big bags, then you can take that vacation. But for special times like this in the market, you should invest as much as you can and don't splurge on heavy things. So, not financial advice, but what I would do is, the next 3 to 5 years will be extraordinary. We're seeing all sorts of things happening. We're seeing S-curves colliding across AI, robotics, crypto, TradFi disruption, you name it. It's going to be a very special time to be invested. Get 3 pillars. You didn't mention real estate, but I do really believe in having some source of passive income, just enough to cover your expenses. The rest you can put on the table and play with. And that would be heavy crypto and heavy disruption. And I like the fact that you're 65% in safe funds. That's fine. Maybe consider taking some of that and putting it into, a couple of apartments. Could be a good idea. Also, it could be as a perfect way to secure your burn from this rental generation. Absolutely key. And a small position in disruption can be life-changing as well, but risky. Like I was a 5% allocation in crypto at the beginning of the year to Solana, and now that's completely outsized many other positions. So it's just how it's important to take a little piece, a small allocation, 3%, 5%, and let it ride, but keep the majority safe and get some passive income. Just what I would do and what I do. So I walk the walk. Next is from Crow Crypto. I like that. I like the word crypto as well for crypto and macro. I doubled an account swing trading, TQQQ and UPRO in 2023. What are your thoughts on 3x leverage ETFs like TQQQ, UPRO, FNGU, etc.? And what would you suggest for pair trading? Well, let's just jump right in. We built a model exactly for this. It works really well, and it's real simple to use. So this is TQQ and SQQQ, and it is money. Literally, this thing will have a 100% win ratio. It tells you based on the following, green is to buy, red is to sell. But if you get, say, a sell flag or a buy flag and the trend is going in the wrong direction, let the trend be your friend and keep in the trade or keep out of the trade. At the very top, you see the sells, and then you have the mean reversion, inverse correlated pair chart at the bottom with standard deviations. When it's -2, you buy. When it's +2, you sell, as long as it conforms with the flag above. We have taken one of the most complex things to do and made it super simple. But just, there's so much opportunity. You can just swing trade this. You can double, triple, quadruple your bag in a year. But just wait for the opportune times. Wait for those standard deviations to go nuts. Find your rhythm. Use the back test and play with it. It's great. Paper trade first, always. Next is from Sky King 1008. How large of a sell order do you think it takes to move Bitcoin down from 45,500 to 41,500 in a couple of hours like it did this morning? Are we talking 50, 200, 500 million dollars worth? Well, I did an analysis of this, of how much I analyzed a whole bunch of whale dumps and watched how quickly they bought them back. And basically, the easy answer, you need about 3,000 Bitcoin to dump on the market. But that was when Bitcoin was like $20,000. So that's $60 million or so. Not a lot of money, but you can move the markets 10% in a heartbeat with $60 million. And that's what the big whales do. Not a lot. Remember, some of these big whales have 10,000, 50,000, 100,000 Bitcoin. That's how they can play this game. So that's how they, but remember, it has to be done during a quiet period. Like we had a very quiet period last night. Saturday night Pacific time. I was trying to get a fill order. It took me over an hour and I was all the volume. It was just, everybody was out at the clubs or at dinner or whatever else. Nobody was trading. Nobody was selling. So it was really hard to get fills. But getting back to your question, what took us down? It was not a whale dumping. It was maybe the whale dumped at the very beginning, but what subsequently happened was what's called cascading liquidations. That's what caused the 4,000 drop. We were at unprecedentedly high levels of leverage. Somebody saw this, somebody played with it, somebody dumped some fake media on the market, etc., and it caused liquidations to happen. So where those arrows are shows you exactly where the liquidations happen. The dip stabilizes, and then a dip, crash, liquidation, cascading, bang, 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 bang. You can see them very clearly on the chart where this happens, and you can also look at the volume on the left as well. So if blue is greater than yellow, the buyers are in control. If yellow is greater than blue, the sellers are in control. And when yellow is greater than blue, the price falls. That's the only thing you need to know. But this is what happens. This causes these cascading liquidations, and that's what brought the price down so fast. So I hope that helps. It may have been a whale to set the initial spark, but the rest was just cascading liquidations all the way down. Next question is from Boostagaz. I currently hold no miner stocks in my portfolio, and based on your recent analysis, I have FOMO and want to get in. Am I too late to the party? And if you had 10k to spend on miners, spot, how would you allocate? All in on one miner or split across a few, like CleanSpark, Bitfarms, Cypher, and Riot are the names I'm considering. They happen to be the names I actually own, coincidentally. But would you look to hold long term or get out pre-post halving? And if you could pick only one, what would it be? Wow. People are packing so much into every question. It's crazy. But let's look at the miner model. This is as of today, January 7th. Of course, the markets are closed, so we don't have real-time stock prices. But there was a huge variation last week between Riot and CleanSpark and Bitfarms and Cypher and all these things all over the place. Now, based on updated data, CleanSpark is still, yet again, number one, but it did fall to number two 3 or 4 days ago. Riot is number two. Bitfarms is number three. And what's also interesting, though, and I always have to stress this, these things are a moving target. If the price of a miner goes from $10 to $12, all these ratios change if all the other miners don't go up by 20%. This is what's happening. In addition, these types of news things hit all the time. This happened after the market closed on Friday, where CleanSpark announced a shelf offering. And this is my Patreon post from Friday. And in after hours, CleanSpark fell a little bit. And it means the market is afraid of dilution. But what these miners do is they sometimes sell shares like Michael Saylor to buy Bitcoin. These miners sell shares to buy new rigs to increase their hash to mine more. And I just want to share a couple of key details which many people won't probably realize. They'll just go to Seeking Alpha and they say, oh, shelf offering, CleanSpark's going to hit the toilet because they're going to sell more shares. Of course, new shares hitting the market will bring the price down a little bit, but you also have to understand we're going into the Bitcoin halving. Bitcoin's at 44,200 as we speak, was 44,450 when I started this. It's going higher, but just think about these numbers for a second. And I pulled these on Friday, and I can't remember them exactly, but I think the CleanSpark mined about 7,400 Bitcoin in 2023. That's a 60% increase over 2022. Their hash went from 3 to 10, and over the next 4 to 8 weeks, they will add 60 to 80% to their hash. Their hash will go from 10 exahash to 16 or 18 exahash. Okay. Now, what you need to understand is they're plugging in brand new rigs that are very much more effective and efficient than all the other miners have with old rigs. So that's going to be very important too. In addition, I think they hold over 3,000 Bitcoin right now. They mined a record 720 Bitcoin in December, and I think they hit 30 Bitcoin in one day mined. It was crazy. And so they're balancing it very well. I think they know what they're doing. They want to be a leading miner. That doesn't persuade me. And in addition, just so you know, the last 7 trading days, in full disclosure, I started a position in Riot and I bought more CleanSpark. Actually, on Friday on a dip, it fell down to $9 and change, and I said, whoa, that's great. It was at $13, $14 a few days ago. So I bought the dip, and I have a large existing position, but it doesn't cost me anything because I used options to reduce my cost base to nothing, kind of what I do with MicroStrategy. So with that, which miner? I think you asked if you only had to buy one. My biggest position is CleanSpark. But I made it my biggest position before the shelf offering hit, but that doesn't dissuade me too much. I know the CleanSpark team, I don't think they're going to issue shares and line their pockets, as I call it. They're going to do it to invest in rigs and more scale and more hash. Because a lot of other miners as well lately, like you have Marathon and others that are just talking huge expansion plans. And it's literally like a nuclear arms race. You have to keep on expanding, and you have to keep reinvesting, and you have to have the latest rigs, and you have to grow your hash, or else you're not going to make it. But as the price of Bitcoin goes up, and when companies like this are going to be mining maybe 30 to 50 Bitcoin a day in 1 or 2 months, that will be huge. So think about that. So I'm not put off that much. And another way to answer the question, if I had to buy one, I now have 4, and the 4 that I have typically are normally top of my model, and I use that to dictate how I buy, and it's been working very well so far, so fingers crossed it continues to work. Touch wood. And favorite part of the day, a big shout out as well to the son, Jan, of one of our community members. He volunteers at Onca. It's a wildlife rehabilitation center in the jungle of Bolivia. And it was a beautiful story of how he gives his personal time. And it's completely volunteer run to these animals. And all sorts of beautiful leopards and monkeys and all sorts of good stuff. So shout out to the team down there in Bolivia who are making a difference. And I hope we can help as much as we can. And tomorrow DCA is on my channel, 7:30 a.m. Pacific, 4:30 Central European time. And now we'll do some live questions. So thank you all. There's nearly 5,000 people here watching. So hit the like if you're learning something new. I guarantee you are. Let's go. I know the questions are somewhere. Thank you as well to the mods in the chat for supporting us. We've got Happy Feet out there. Long time Patreon member. All the best to you and your family and the I team. Thank you for always being there and looking after everybody. Thank you so much, Happy Feet. You're so kind. And MT, love the channel. Love the channel. Love you here too as well. All the OGs. Matt C. I'm starting to see a common narrative out there that we may tap out of this cycle early because of the institutional money and the fast run up this year. Where do you stand on this? Early 2025 or as expected, the end of 2025? So I think a lot about this and I've covered it many times. In fact, I made a video, I don't know what day it was, Thursday morning, about the 2024 targets and how my 2024 targets are actually higher than my 2025 targets, which signals maybe we top out early in 2024 and not necessarily run to November 2025. Now, there is one more caveat though. I spent a lot of time analyzing the spot ETF gold inflows. That thing went up for 8 years straight. And gold is not scarce. Bitcoin is scarce. And remember, gold doesn't have, well, it probably has some long-term holders, but nothing like Bitcoin, where people will not sell. The total available supply is tiny. It's about to get a lot harder. There's rumors that BlackRock has $2 billion on the sidelines, ready to go in the first day into the fund. $2 billion. Like I was thinking maybe it could do 50 billion in a year or two. 2 billion in a day means they get there in 25 weeks. Okay, and we're going into a halving and the long-term holders are not selling. It's going to be absolutely crazy. So I'm very excited. I think there's two ways of thinking about. One, we could run for a long time, like 8 years, like gold. And Bitcoin's a lot harder than gold. Or we could top early. We don't know. But we will know by analyzing on-chain data. So we'll have the answer. So make sure you subscribe to the channel to get the updates of where we are in the cycle. Because we developed a magic sauce to determine when it's going to get toppy. Ron B. I bought a lot of Cypher. It's the only one miner I own. Would you recommend splitting this up a little bit just to stay on it? I'm about even right now. If there was another one to put money in, what would it be? Again, the last week I bought Riot and CleanSpark. You know, we don't know what's going to happen. Each miner is unique. Each miner is different. The ones I'm in are all growing their hash rate aggressively, and they've got very, very lean operating structures. Riot has an electricity credit too, so each one has its own special sauce. I like them all, but I know from experience that things bounce around a lot. Things are not stable. One will run first, then the others will follow. So I'm just prepared to identify when they top out and do what I do with MicroStrategy and sell calls against the position and amplify my returns that way. So that's what I'm doing. I wouldn't have all your eggs in one basket. And Cypher still has that issue, which kept me out of it for a long time. There's a Canadian company called, I think, Bitmain or something. They have like 1/3 or 30% of the shares, and they could dump at any time. So that would bring the price down. But I think they're clever enough to hold. And from a financial perspective, Cypher is still good, but I like to mix it up. And now I own 4 miners, and I became very bullish on miners as well because of the crazy fees that they're making. Bonkers fees. Tomislav, your thoughts on engine perspective in this bull run? You did a detailed analysis 2 years ago, and can you update your view on engine? I can, but I'm not a gaming metaverse person. I do know that engine has the best compendium score of any in its category. Always has. That's why it was the only one I ever bought. I've never bought a gaming token, but I'm much more comfortable with where the real money is made, and that's in things like the Solana ecosystem and dexes and aggregators, and that's where the money will be. That's where the explosive growth will be. It'll be one of the key narratives, I believe. Metaverse is just 1,000 different metaverse plays, and if you've seen any metaverse names in the past, they'll just go nowhere. They're just bad tokenomics, money grabs, waste of money. Why not play either really good at layer ones or really good dexes is what I do. Let me see. Did IDSS flash sell when Sol hit 120 recently? I need to check. I don't remember that. I don't have it open here. I'm on a new computer and I don't have my trading view fired up here. I'm afraid. But I will post in Patreon that exact chart because I can't do it right now, and you'll see it when I get off this video. Let me see. Ted Moore, can you do a video soon on best ways to cash out? Yeah, profit taking. I've done a number of those. I have a profit taking model. The Lilo model is designed for profit taking. ATR model is designed for swinging after things get frothy. And the profit taking model is also available in Patreon, where you can configure your own method. I shared a whole bunch of templates and different methods. But yeah, when we get closer to the time, I mean, we're before the halving. We have a lot. People aren't on the bus yet, or people are selling too early. We are early, everybody. We have a long way to run. Don't think about selling now, okay? You can swap and pair trade between stuff, but don't think about moving to cash. We're on the verge of really, really great stuff right now. Rick Enbacher, on your trading view prediction indicator version 1.3, is there an alert system so as to avoid being in front? Yes, there is. And we have members that get trading view alerts on their iWatch, Apple Watch, whatever it's called, or in their cell phones. Yeah. And that can be SMS or email or whatever you want. And it'll pop all day. I also use a lot of trading view alerts when I set traps, limits that are based on models. And when they hit across 30, 40 assets, I get an alert and I can see and identify exactly what it is. Mike Zoom, these fake ads are quite convincing. Michael Saylor, Anatoly, report them. I've spoken to Google, 100 times. I spoke about the scam ads. And I'll say it one last time. If it's Darwinian, if people think they can give a bag of money to a stranger and get double that bag back, they should not be investing. It's human nature to eliminate. I don't know. It's really sad that this happens. This has been happening, by the way, for years. It's not a new thing. What's new is the AI, with the South African voiceover, with Brian Armstrong's face or whatever. The rest is the same scams all the time, everybody. Don't click on anything. Don't respond to anybody who DMs you. Don't answer the phone. Don't respond to text messages. Don't click on an NFT that arrives in your wallet. It's all a scam. All right? Everything is a scam. Just be careful, everybody. And thank you so much for coming. And thank you as well to Glenn Joe, Sir Winston, Jeff Hammer, Pancake Panda, Forrest M, Jimmy Neal, Andy, AC1, Dog1, and Cryptorilla. I love that name. And right now the market is still $44,220. Bitcoin's flat, but some people do expect a Bitcoin pop tonight. Wait for Asia to open in a couple of hours. Typically 3 p.m. Pacific is when things go off. And that's 2 hours from now. And also, thank you to DeFi Logic and Gaffalo, KN, and see you tomorrow, 7:30 a.m. on my channel for DCA. I'm going to go work on that agenda right now. So thank you all for coming and hope everybody's doing good. Love you all. See you later. Bye-bye.